As we kick off the crazy earnings week, Monday seems to be a really good day so far. I'm going to talk about earnings. I'm also going to update on Jacob's account. Stick around, it should be a great video. Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K. Hope everybody's having a great Monday. I hope everybody had a good weekend. I want to apologize off the bat because I was going to do a video with Jacob yesterday, but I totally forgot. We headed out to Utah to get him some boots and bindings for snowboarding this winter. So I was a little bit stuck and couldn't do the video. I actually was going to do a live, which I thought might be fun, because the reality is we don't do a whole ton of editing other than I put up those little whatever, those memes or whatever you want to call them, and I thought it'd be nice to just have the conversation even if nobody showed up. Speaking of which, tomorrow 11 a.m. for those of you watching today, if you're available, I will be doing a live. I'm going to try to be consistent about it. We'll see how that goes. My schedule changes a lot, so I'm not always the best at keeping to those things, but at least for now, it'll be second week, and hopefully some of you show up, have some questions, and we can answer them. It's funny because last week I kept on like poking at the camera, trying to figure out how to respond to questions. Then it finally dawned on me that you just answer them when you're doing a live. You don't respond through the text. So anyway, huge earnings week. We have tomorrow SoFi, I think UPS, I know Visa is this week, Amazon and Google. Um, we got so many earnings coming out this week. Whirlpool, I think, might be after the bell today. A whole lot that impact my account. I have a feeling we're actually going to see some very good earnings. I don't know what that means in terms of how the stock will react or the different companies, but I do think the economy seems to be chugging along and doing okay, and we're going into Fed rate cuts. It's where I talk about I almost feel like the market could end up going parabolic. Now, we opened up significantly higher today, and then the market seemed to soften throughout the day, which is not the best sign for what's going forward. I would hate to see really good earnings with the stocks initially going higher and then selling off all day. That would not be a wonderful sign. Me personally, I've been using options to get those extra premiums going into the earnings season, but just in my trading account, understand that the set it and forget it one, like really when I call it set it and forget it, there is a reason I call it that. I don't make any adjustments in it. Now, if we went parabolic to where I thought that the market got way overvalued, and I don't mean what people are talking about now, because to be fair to the analysts, I do think we're probably a little bit frothy, but even still in the general, what I invest and leave, that makes no difference to me. That's just traditional ebb and flow of markets. They get overvalued, they get undervalued, and they keep chugging along. Now, if we get totally disconnected from what I would consider all reality of valuation, sure, then even in a set it and forget it account, I might make some changes to it. But this week, going into earnings and over the next couple weeks, I will be selling calls and puts and getting those extra premiums from the earnings and when the volatility goes up. Now, Jacob's account. Let's talk about it a little and what he did. Now, I don't know how many of you have been watching or paying attention. He's got the three stocks. He's got SoundHound, he's got Open Door, and he's got LAC, which is the American corporation, but it's Lithium American Corporation, which I think is actually a Canadian company, but where the U.S. government has taken an equity stake in them, which gives me some bearing similar to what I felt like with Intel and how I thought it would behave once we took a percentage of it. And I think that it's working out perfectly, even though the stock is down. That is the same thing that kind of happened with Intel. It takes some time of not just taking off and going straight up to shake out people who won't stick with it for a longer amount of time before it starts going higher. Now, understand, I think there's like an 80% chance that LAC goes to zero. So it's not like this huge conviction to I just love this company. I just think it's really good for somebody who I'm teaching options because the volatility is high. And I think there's a small percentage chance that the thing could 5 or 10x in a reasonably short amount of time, similar to something like OKLO or some of the others that have gotten out of control. So I don't know if you guys remember, but Jacob had moved to more of a monthly option for LAC as well as SoundHound just because of the way that the account was playing out. And he was still doing weekly for Open Door. So this week he decided to sell, forgive me, I'm doing it off the top of my head, but I think it was a 6.5 put and a $9 call. So those were the two options that he sold on Open Door. And obviously, like every other week, we just kind of leave it and let it play out. And the whole point of this is trading options can be somewhat, you know, what's the passive as well. He's spending maybe 20 minutes on either a Saturday or a Sunday looking at the options chain and deciding what he wants to sell. And, he's beginning to ask me things like, was that good? Did I do the right thing? And what I've told him is, I wouldn't even look at it as a good or bad. It's just a matter of you made the decisions you've made, and wherever the stock goes, then you adjust accordingly. For example, if the stock starts going higher and you get taken on calls, well, maybe you start to get more aggressive on the puts you're selling. And if the stock is falling lower and you're getting assigned shares, well, maybe you start getting more aggressive on the calls you're selling. The only things to be careful of is twofold. If the stock continues to fall, you don't want to be so stubborn and just keep selling puts and selling puts and selling puts, especially if it's a company that's a little bit risky and not some big old boring company like Target. You guys love how much I talk about Target, especially my buddy Steve, who sends me little emojis of a dog and poop after it, telling me what he thinks of Target. Hey, Steve. But as much as I'm joking, if it's some really volatile, crazy stock that could really go out of business, you don't want to keep buying more shares and buying more shares if the stock price is going lower and lower. Now, you can do the math to see how much you're taking in premiums to offset that, but that's a big risk. The other thing is if the stock starts drifting higher, you don't want to chase it too high on the puts either. So I'll use SoundHound, for example, because I think we started buying it and trading it around $14 a share as it's drifted to 18. I know it was trading 19, but let's say it gets up to $22 a share. No earnings, nothing's really changed. You've been selling calls, and we originally started with 200 shares. He now only has 100. You don't want to now be selling $20 puts per se, because it could easily fall back into that range, and you don't want to get assigned at an exceptionally high price unless you've done the math of how much you've collected in the premiums that it makes sense. Does that make sense for everybody? Like, I don't want to end up selling puts too high on a stock, getting assigned at an exceptionally high valuation, for it then to correct, go back into the range where I think it is, and now I'm long from a price that I think is pretty high. So maybe I'm better off pushing out time instead, which is kind of why we did that with SoundHound, because if we pushed it out and went to a monthly option, all of a sudden he could sell a put that was more back in the range of where we were talking about, around $14. I'd have to look at the account to confirm where the puts actually were, as well as we went to an exceptionally high call strike price. We did a $30 call with the attitude of, if it really takes off and it gets above 30 and we get taken on those shares, that was a great trade. We can look for something else and go into another options trade. Now, those of you who've been watching the Intel trade, I just wanted full disclosure of what I've done with it since the earnings came out and it had a bit of a big move. I personally got out of about half of my position so that I have a much smaller trade on. I'm really happy with how it did. I still think it's going to continue higher. I still think it's in play. I think with the government getting a 10% equity stake, I think the administration that is in place currently is going to force it to work. And they'll get to a point that by the end of the administration, that they'll be able to point to that, say how great they did, and use that as part of the election campaign for whomever's running next, which I do not believe will be the current president. I think somebody else will run for office. Just my personal opinion. I am not very political. I don't want to have people get upset having some thoughts as to who I like or don't like. So it's really just an analysis for the markets. Now, that being said, as always, this is not financial advice. Please use anything I do in the videos for entertainment purposes only. You need to do your own research. You need to reach out to a financial advisor. And I am not a financial advisor. I don't think you should be listening to me or anybody on YouTube for that matter. I've done videos about all these idiots on YouTube and some of the things they say. I mean, some of them, they just get totally out of line and absurd. And when they talk about how much money they're making, well, they might have an awful lot of money to be able to generate those revenues. On top of that, I'm probably the biggest idiot on YouTube, so you sure shouldn't be listening to me. Now, my goal with the channel and anything else is just give people some knowledge and some advice. It's also hopefully a little bit entertaining. I try to do jokes every now and then, even though I'm probably the only one who gets my jokes. Target jokes between me and my buddy Steve, who he can't stand Target, so he thinks it's funny that I pick it. But understand, he is a short-term trader. And when I talk about Target with you guys, I am talking about a 5, maybe even a 10-year position. I am not making some bet of where I think it'll be over the next few months. I don't know where stocks will be over short term. Sometimes I get very lucky. I think that my background when I traded on the floor of the exchange, sometimes I can see a short term move. But that doesn't mean that's what it does over the next 3 to 6 months. Things can go pretty far against me, and I might stick with it if I still believe in that company. And if I don't, well, maybe I make some changes. As you guys know in my set it and forget it account, I just really try to stick to the stocks that I think are the best. In the trading one, I bounce around a little bit more and do things that I think I can just profit on. And I really enjoy that stuff. But I also enjoy dividend stocks as well. Now, in terms of earnings coming out this week, SoFi, I think, is going to beat on top and bottom, and I think they're going to raise guidance. What does that mean for the price of the stock? I don't make a guess on that. I really don't. It's kind of why I say the markets move where the markets move. It might already be priced in, it might not be. It's very hard to do that stuff, but I think they're running on all cylinders. I think they have a tendency to underestimate what they're going to do for earnings. I think that's just their personality, which is also why I think they're going to beat on both top and bottom. I also kind of feel that way for some of the others. I think Amazon might have very good earnings. The thing that everybody's waiting to see is the Amazon Web Services. And I saw a really interesting thing where the All In podcast, now don't take that the wrong way, I don't always love those guys so much, but they were talking about that stuff, and I think they have a good handle on it because they are involved in it. Talking about how Google and Microsoft's side is growing. Well, I guess something happened where there might have been an outage with Amazon, which caused some concern from some of the bigger companies. And what they really think is people are going to use those services from all three. And they might even use Oracle as well, more than just relying on one, which is why you're seeing the percentage of growth on the others beginning to grow quicker, because Amazon used to be just the place to go. Now you can go to Microsoft and you can go to Google, and I guess Oracle's getting involved in the space as well. And they don't see a real hierarchy of one being better or worse or whatever. And I think since they're in those industries and they're connected with some of the people that use those services, that they might be right about that. You might see some even distribution, but that doesn't mean slowdown. The market really beat up on Amazon, and they confirmed the number that I thought that's growing at 17%, which to me is incredible growth. So I don't know why the market beat up on it. As you guys saw in one of my other videos, I think that Amazon is one of the best priced stocks right now, and I think that's still the case. Going into earnings, I expect them to do pretty well. Again, last time they had earnings, they did pretty well, and it sold off pretty hard. I almost hope that happens again, so it creates an opportunity for me to be able to buy it cheaper. But if I can't and I just have what I have, that's fine too. Google also reports, I think that the stock, like at least to me, feels like it's gotten a little ahead of itself. Now, I still think it's really well priced. It's not something that I trade actively. I have it in my set it and forget it account. It is one of my larger positions. I don't plan to do anything. It makes no difference to me which way it goes. I just feel like from where I watch it, it looks like it's gotten a little ahead of things after it was way behind. And it was the one that I thought was the best value for a while. Ever since it seems to have gotten a little bit of a better, you know, people like it a little bit better and it's a little bit more popular, it's really taken off to the other side. And again, I just think maybe it's a little bit stretched, and whatever comes out with the earnings, maybe we see a little bit better pricing afterwards. I guess we'll have to wait and see. Let's see, who else is doing earnings this week? There's so many companies, I'm just overwhelmed. Verizon's reporting, Meta, oh, and PayPal, which I forgot to talk about. At least as what I look for in terms of bases and tops and everything like that, PayPal to me as a trader looks like it's finally bottomed out. Do not hear that the wrong way. But it's been so negative for so many years at this point. The price to earnings ratio is super low. I see it popping up on all sorts of sites, and from what I understand, it actually helps the sales of the companies that have been using it. It makes me feel like we're finally getting into an uptrend on PayPal that will probably continue. Now, they have earnings before the bell tomorrow, so I'm anxious to see how they come out. Again, it doesn't really make a difference to me. I just want to see because I want to see. I bought PayPal in my set it and forget it account about a month ago, maybe, and I'm very happy with the position no matter what happens with the stock. And similar to the others, I'll pay attention to the earnings and see what they say. But if the stock falls back into the low 60s, I probably see that as an opportunity to possibly pick up more. If it shoots up, I can just pat myself on the back and regret that I didn't get more of it. I have too small a position. But I try not to put on anything that's way too big of a position where I worry about this stuff too much. I hope none of you do that as well. I think that position sizing is probably more important than anything else, and putting away as much as possible for the future and not looking at it so much. I just watch it all the time because I love markets and I think that I can guess whatever I think I can guess. Anyway, I gotta go get ready with the family. Tomorrow is my anniversary, even though I will be doing the live in the morning. We're gonna have a nice dinner. It was very fun to drive out to Utah and get the boots and bindings. And I think it's so cool. We go that far because the people who are the employees at the shop, they're just so nice. Like we have no reason. We have stuff here in Vegas, but we make the drive because they're so friendly and we want to support the business. Anyway, if you haven't already, do me a favor and hit that subscribe button, smash the like button, make some comments in the comment section. You know you have no idea how much that helps YouTube's algorithm and the channel. I really appreciate it. Have a great Monday, and I will see you guys tomorrow at 11 a.m.